Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bullish harami yesterday after the previous session's combined key reversal down and bearish engulfing pattern. It was yet another interesting session as prices tested once again the topside dark blue highlighted upper time, currently 107.17, of the late December 2023 to mid-March 2024 bearish Andrews pitchfork, and the April 2020 low at 107.25, as well as down below to the bright red middle time, currently 106.89, the bearish shift pitchfork for the same move as the bearish Andrews pitchfork. It seems the market's getting squished in between these supports and resistances. Further below is the 2020 low at 106.36 and the lesser Fibonacci line at 106.13, whilst above is the May 2020 low at 107.66 and the combination of the short, medium and long moving averages, currently 107.99 to 107.98. which may or may not be forming actually a dead cross. We'll have to wait and see on that one. We now have a large amount of overhanging ammunition overhead, stretching from the mid-November last year until 3 weeks ago. It also proves, as I previously pointed out, the recent bearish bow tie formation. Now, the theory behind this suggests two things. Firstly, look to which way the moving averages move after the crossover to indicate the next direction, which in this case we have been suitably moving downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it will be between the 30th of April to the 6th of May, so right now, hence watch out. Finally, and I've repeated this often over the last 3 weeks, please pay attention to the crossovers of the tines, circled on or about the 26th of April and the 9th of May. Around and usually a very little short time after, one may see volatility. Now, right now, I'm more inclined to look to the 9th of May as being a better candidate for this sort of action. So far today, more of the same, a test up to the dark blue upper tine and moving just over it at the moment, and also the April 2020 low, and testing also prior to this down to the bright red middle tine below. Cable, aka sterling against the US dollar. An immediate countering bullish engulfing pattern yesterday after the previous session's bearish dark cloud cover pattern. It also supports the idea of last week's weekly key reversal up. Prices punched up and closed over the gold highlighted flatlining long moving average, currently 125.49, but did not try any higher. Not far above is the 50% Fibonacci line of the July to October 2023 move at 125.90, with a flatlining short medium moving average and medium moving average further up. They're currently at 126.18 and 126.48 respectively. Meanwhile below, we have the lesser Fibonacci line at 124.60, and even further below, and in relative terms quite a way below, is the 50% Fibonacci line of the June 2021 to September 22 move at 123.16, with the June 2022 low at 122.48 below that. Finally, I previously pointed out the bearish bow tie formation made by the moving averages 4 weeks ago. Now, the theory behind this suggests, firstly, to look to see which way the moving averages move after a crossover to indicate the next direction, which has been suitably downwards. Secondly, between 15 to 20 sessions after crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it would be between the 26th of April and the 3rd of May, so right where we are now, so watch out. So far today, a reactionary move back down, at the start, but now pull back up and looking like an indecisive doji cross spinning top right now, based around that long moving average. Euro sterling, a fifth bearish black crow on Friday and a bearish closing black Mariposa. Prices punched down through and closed below the following. The broken dark blue highlighted upper tine, currently 85.49 of the November-December 2023 bearish shift pitchfork. The combined December 2022 low at 85.45 and December 2023 low at 85.47. And the lower trend line, currently 85.39 of the purple highlighted late January today expanding wedge pattern, currently at 85.39 to 86.49. So all in all, possibly becoming a quite decisive move lower if it is sustained. Now so far today, a small dip lower, but also a reactionary move back up. As far as the twin December lows, and even as far as the upper tine, the dark blue upper tine, but it started to sort of peter out a bit, and though it's not been sustained, prices are up there and a bit over the purple lower trend line as well. So an interesting reactionary move up, and not dissimilar to what happened 3 weeks ago and then back in mid-March and mid-February. US dollar against the Japanese yen. The market here became more exaggerated yesterday with a range of about 3.5% of the US dollar yen value, but ultimately somewhat disappointing. We ended up with an immediate countering bearish harami and outside day, and it was this outside day feature which was the most disappointing after the previous session's unusual but very large key reversal up. Prices pierced up as far as just over the purple highlighted middle time, currently 160.04 of the large February 2022 to January 2023 bullish shift pitchfork. And they went down below the red highlighted middle time of the more recent July to December 2023 bullish Andrews pitchfork. However, prices finished up closing just over the June 1990 high at 155.78. Okay, so yes, this is the reactionary bearish action with a new all-time high since this century. And it's been something many have been fearing for some while, but it was also not much of a decisive effort from a pretty big pattern. We are still where we were, in essence, yesterday. And so far today, a move higher, though not by much. I suppose more an aversion for any try lower, really. US dollar against the CNH, the offshore Chinese yuan. A counter-to-counter bearish engulfing pattern and bearish opening black Mariposa yesterday after the previous session's immediate countering bullish piercing line pattern and bullish double pattern. Prices were again capped topside by the dark blue highlighted broken lower trend line extension, currently at 727.41 of the dark blue highlighted, well, ascending triangle really pattern is still what's left of it, the extensions of it. Meanwhile, below the market pierced the dark blue upper trend line extension, currently at 723.83 of the same pattern, and even briefly below the long moving average, currently 723.53, but not as far as the next support, which is the short medium moving average, currently 723.08. All of this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all. As though I do not show it here on this chart, there have been also monthly key reversals up for March in US dollar CNY, the spot onshore Chinese yuan, plus monthly key reversals up in March for the US dollar CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if we have follow-ons, and this is where the rub is, as 2 weeks ago we saw not just a weekly key reversal up in spot USD CNH, but also in USD CNY, the onshore Chinese yuan, the 1 month MDF there, as well as the 1 year NDF. Altogether quite an achievement. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then breakout lower from the ascending triangle. Thus the primary target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I'll keep those targets on my daily chart, as we've already had a false break lower and more recently with what looks like a false break higher as well. So as I say, I will keep them on for now, but I'm happy to retire them in a heartbeat. And I'm also mindful of the potential topside now for the more recent moves higher. So for good order's sake, I've marked for now a primary target X2 at topside for a continuing move higher at 730.05, and a secondary, much harder to reach, target X3 up at 732.80. Now, so far today, a reactionary move back up, still within the dark blue trend line extensions, and looking a bit like a third countering bullish harami right now, though it's moving towards an indecisive spinning top. US dollar against the Mexican peso. A second bearish black crow yesterday after the previous session's bearish harami. This time the market punched down and closed below the broken dark blue highlighted upper time, currently 1708.37 of the December 2023 to January 2024 mildly bearish shift pitchfork, as well as the March and April 2016 lows at 1709.23 and 1703.89 respectively. Below we now have the flatlining medium moving average, currently at 1693.62 and congestion at 1688.97. Overall, even now, all this recent action has set up April to be a possible monthly key reversal. Thus, if we close tonight, that's the 30th of April, if we close tonight either over 1704.90 or under 1653.10, then we'll be on. Anything in between would have ourselves a lesser outside month. Well, right now we are looking, we've moved down from a possible monthly key reversal up into a possible outside month. Interesting. Now, so far today, a move up over the April 2016 low, but then a move back down, such that we are currently looking potentially at a inverted hammer pattern right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.